Welcome to Travisa Financial. Travisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Travisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Travisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Travisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Travisa Financial, no one serves first-time homebuyers better.
Hello, everyone, and welcome to our EEP Power Up Scenario Monday series. So first, I just wanted to give a little bit of information about myself. My name is Monique Manaya, and I have been in the mortgage industry since 1997. I have done everything from working with brokers to wholesale, retail, and most recently, I worked with the government entity on this EEP program, and I was extremely fortunate to start with them at the very beginning, and I helped further develop procedures, processes. I was on the underwriter committee, and I oversaw processing, closing, funding, title approval. In addition, I managed the tribe's authorized signers. So I had a big role over there that I really enjoyed because I really truly believe in this program and I love this program. And now I'm over here at Travisa, and I think that together we can do great things with the EEP program. So in addition, Travisa, we really strive to make homeownership a dream come true for everyone. And through homeownership, that's where they get their generational wealth. And our innovative programs, such as the Earned Equity Program, really allows us to go and help those underserved communities and the people that just don't quite fit into that traditional mortgage box. So what is EEP and how does it work? EEP essentially has a government entity, which is a Native American tribe, Tule River, purchase a home selected by your home buyer. Simultaneously, while the government entity is closing on that FHA loan for the property that your home buyer picked out, they are going to enter into a homeownership agreement with a memorandum that is recorded on title to secure your home buyer's interest. The home buyer makes payments to them. They can make improvements, remodels at their liking, and they even receive a 1098 interest statement at the end of the year. So essentially, one thing that I do want to point out is that because we have the home buyers, they have a file that is going to be submitted as a TBD through our TPO platform. And while their loan is getting underwritten and their approval is getting underwritten by the government entity, there is going to be the government entity file that is going to get submitted with the subject property address, because that is the file that is going to close here at Travisa with FHA financing on the purchase of that home. So the tribe will be underwriting your home buyer to sign their homeownership agreement. So there are two files running simultaneously. It is a little bit unique in that regard, but we are definitely here for you guys to help support how that works. We can give you training on our TPO website. So definitely remember to keep us in mind. And when you're thinking that this is extremely complex, it is a little different, but as soon as you wrap your mind around it, do a few, and then us being able to help and support you, I think that you'll be able to master it in no time. This program has amazing, great features such as 3.5% down for ITIN, U.S. citizens, non-permanent resident aliens, including DACA. We have the low and no credit scores, so down to a 580, and alt trade lines are okay. Our 3 months bank statements for not only self-employed, but W-2 ITIN and DTIs 50 over 60, and that is standard. There's no, rate hits or anything of that nature to go up to a 50 or 60. That is standard. There's no rate hits for anything, so just keep that in mind. There is no source or seasoning for funds to close. Bankruptcies are okay. We actually allow Chapter 7s to be discharged 1 day prior to closing. So you can actually have your home buyer pre-approved, go out, pick the home of their dreams, and go through the entire process while still in Chapter 7, but then discharged 1 day prior to closing. So I know that that is really huge. We do follow FHA's matrix for property types, which include the 1 to 2 units, PUDs, condos, manufactured homes, and seller contributions up to 6% of the sales price. And so that is definitely huge when you're looking at trying to, offset the home buyer's funds to close. So when you're qualifying your borrower, there's many different scenarios to look at, whether you're looking at an ITIN borrower or you're needing somebody that is self-employed with the 3 months bank statements. One thing to keep in mind is why would I use the 3 months bank statements for W-2? We just closed on a file where the home buyer was a waiter on 2 different jobs and received a lot in tip income. And so in order to use the W-2 wages and the tips, which, he did not claim on his taxes, we used the 3 months bank statement program and was able to add all of those deposits up and give him full credit towards income for 100% tips and all of his wages. So we allow gift funds, although please keep in mind that we cannot use gift funds for reserves. So you can always use the gift funds and then use the home buyer's money that they were going to use to put down and swap them out and have those used as reserves. Verification of rents need to be clean for 12 months. And for funds to close, they do collect the first payment up front. So please keep that in mind when we're calculating funds to close. We have a great worksheet that can assist you So if you're looking at wanting to get a really good idea of what the total funds to close are going to be, we can get that over to you, your account executive, myself, or it's found on TPO Connect under the Earned Equity section. I do want to mention for the self-employed, if you are looking at using the 3 months bank statement, it's important to remember that there is a standard expense factor of 45%, although we do have a tiered option. The tiered option are for those that are either, of course, 2 categories: service business related or product business related. Service business related are going to be more of your counseling, real estate agents are service based. People that do not need to buy product to sell. And so if you find that the 45% expense ratio does not really, meet who your client is, then we can definitely look at putting them onto the tiered expense ratio. So if you look at the comparison of ITIN specifically, we beat our competitors in down payment, 3.5% versus 15 to 20% down. In income documentation for bank statements, 3 months bank statements versus 12 to 24 months bank statements. DTI, 50 over 60. Most of the lenders have a standard 43% back end. And in order to go even up to a 55, you need 2 comp factors. And credit, huge with credit. 580 minimum score, and you only need 1 bureau, where they require 700 to 720 middle scores. We have a lot of ways that we're here to support you. We want to ensure that you know that we're here for you. We're here to guide you and lead you throughout the process. So we have our 877-888-ASK-EEP line that you can call if you have any questions. And then we also have our dedicated email, which is eepquestions@travisafinancial.com. You have your account executives, which is Norma Summers and Ben Slayton. They are here to support you in any way. And so with all of that being said, I want to go into our Q&A. I'm going to remind you again that the chat is disabled. So you can either raise your hand and we can talk about your question together, or you can use the Q&A box. Okay, so I have a question of how much reserves are required. So that's a really good question, because reserves are only required if you are wanting to get an exception. This program, they have their traditional guidelines and matrix, but they are all about making exceptions if it makes sense. Common sense underwriting. And so again, traditional file, you meet the 580 or higher credit score, you're within the 50 over 60 DTI. You have the funds to close, whether it's a combination of gift or funds from your home buyer. There are no reserve requirements unless you're looking for an exception. Maybe, excuse me, maybe your front-end DTI is 52 over 55. We'll need to get an exception and see if we can get that approved with the front end being slightly over 50. And in that case, traditional requirements for reserves are 2 months. So if there's, your credit score is 578, then again, a lot of times they want to see those compensating factors, which do include the reserves of 2 months, time on your job. Oh, sorry, I just drew a blank. Time on your job, reserves, And if your credit score is low, then your credit score wouldn't be one, but definitely reserves are huge when you're looking at exceptions. I have another question. If they allow for non-owner occupied, and the answer to that is no. You currently have to purchase owner occupied for your home buyer. So non-owner occupied is not available. I do want to mention that if you do have a home buyer that currently owns a home and is going to retain that property and upgrade to a different home, then that is allowed. There's a few different restrictions to that. One is DTI. You're capped at a DTI of 43 over 50. They do require 2 months reserves for that situation, and a motivation LOX. So they want to know why they're wanting to vacate their current home that they own, why they're wanting to move, whether it's, you know, they're moving to a bigger home because their family is growing, or they're downsizing because, you know, kids are moving out, or a different location because of a job. So those are definitely some reasons that motivation LOX can include. Any issues with the borrower client making improvements? So that's a no, but yes. So if they're wanting to, you know, paint or upgrade the home, putting in new floor, upgrading the kitchens, bathrooms, you know, things of that nature, or even, you know, making the landscaping look nicer, putting a fence up, things of that nature would be a no. If it's structural, where you're going to take a home that has, you know, 3 or 4 bedrooms and make those big bedrooms larger, and you're going to then make the home a 2-bedroom, that's something that does need to be requested, and there is a process for that. There's a form that needs to be filled out, and it gets sent into the servicing department, and then they will review it, and whether, you know, they'll approve it or not, and let the home buyer know. And so the process isn't complicated at all if there is, you know, major structural changes that want to be made. Good question. Thank you. So I just want to take this opportunity to see if anybody else has any other questions, but if not, then we'll go ahead and conclude today's webinar. And I will hopefully see you Thursday for our Deal Desk Thursday. But in the meantime, you have any questions or need anything, please feel free again to reach out to myself. You can reach out to Shari, our AVP of operations, or Ben, Norma, our account executives. And I look forward to seeing you guys again. Thank you so much for joining us. Have a great day.